go ahead and get started. If this is somehow, for some reason, your first session during the Power Players Conference, welcome. My name is Karina. I am the founder of her headquarters, and today is day 3, the final day of the Power Players Conference. I have 2 amazing women who are founders of companies who previously exited, aka sold their companies, and we're having a really raw, authentic, transparent conversation about preparing for acquisition and what does it look like to actually sell your company and what does life look like beyond selling your company. So the first person I'm going to introduce is Ileana Guzman. She is from New York City, and she previously sold a beauty company last year. After 4 years of having the business, in that 4-year time span, Ileana had multiple brick and mortar stores. In only 24 months, reached $1 million in sales, and then sold her company last year. Now she is the founder of Smart Beauty Pros, and she works with over 2,000 clients across the country, helping them become power players in business to hopefully one day get to a place where they can sell their companies if they desire to. So she's helping create more millionaires. We appreciate women like you, Ileana. Next, we have Ivy, and Ivy was the founder of 2 different companies that she sold in 2018. The first company was lovewithfood.com, and the second one was Edgy Life. I actually found Ivy when I was digging for some advice in a Facebook group, and she made a post in July of 2018 that caught my attention. I screenshot it and I reference it very often. And in that screenshot, she made a comment saying that the journey of being an entrepreneur is almost like a weather forecast, and it's raining shit with a chance of sunshine. She had a lot of challenges when she first started her business in 2012. She was told that she would never be able to raise money for her company because she didn't have an Ivy League education, because she didn't have a co-founder. And like most women who are here to dominate, she shut them all down. In her 6 years, she made over $25 million in sales for her company and ended up selling the company in 2018. Now she is an investor and works with other companies and also acts as an advisor. So we got some real power players here. Ladies, again, we're so excited. At the end of this session, ladies, we're going to do a Q&A. So as you start getting questions, don't wait. Just go ahead and submit your questions into the chat so you don't have to risk forgetting whatever questions you have. So we'll start with you, Ileana. Tell us a little bit more about the company that you actually sold.
Yeah, sure. So first things first, I feel like there's a lot of misconceptions surrounding companies or only being in tech and qualifying for a sale or an acquisition or an exit. And I was in beauty. So I have a finance degree, and I left corporate America to pursue my hobby, essentially a permanent makeup. And it was kind of like just like my exit from corporate, but never did I ever imagine that I would, sell my small business. So again, a little bit food for thought for the ladies here. There are different levels to sales, and anyone can qualify for an acquisition if you position yourself properly and the numbers are right and attractive. So my company was Browsing, and we were a very small in the beginning, just small permanent makeup studio. And it grew within 8 months to a second location, and within 6 months to a third location. And it just kind of grew like wildfire. And all of a sudden, press and all these things are happening. And, year 4, literally someone knocked on my door of my brick and mortar in Brooklyn and said, "Are you interested in being bought out?" And I was like, "What do you mean?" I was actually pretty offended because at that point, I didn't really understand. I was very defensive. I'm like, "This is my baby. What do you mean? Do I want to give it up?" Then I thought about it, and I said, "This is the American dream. Why am I complaining? This is how it should be." And I think that's a mindset that we have to adapt, where we have to kind of rinse and repeat these things and, grow as we obviously scale and kind of compound profits on top of profits from business to business. So I had a permanent makeup studio. We had 3 locations, Brooklyn, Westchester, and New York City. And we surpassed $1 million in sales in just 2 years and about 2.7 in the 4-year frame. But again, this is still considered a small business. So nothing tech, I didn't have major advertising or publishing or anything like that. And I was still able to have, a 7-figure exit at 27 years old. And for me, that was a major feat, because coming from corporate, the fear was, wow, how can I leave the security of my 6-figure salary, right, for the unknown? That threshold of the unknown is like that. It's very uncomfortable, right? Well, you won't know until you take that step and really overcome that and really step out on faith, and you'll find out what's on the other side. And sometimes the reward is pretty great.
I love that. And you even touched on a couple of things that were going to come up later on in our conversation. So we're going to go deeper. And I see one of the questions, I was also thinking this is, how do you get over that's my baby feeling? So Chanel, I saw that question and we're going to get back to that. Ivy, why don't you tell us a little bit about the companies that you sold?
Well, the companies, so first of all, Ileana said something spot on. You know, it doesn't need to be a tech company when it comes to acquisition, right? My company with EduLife, we focus a lot on disrupting the consumer insight space. So my whole mission was to make market research affordable and accessible to all CPG brands. And I don't have a CPG background. I was a financial software engineer, and basically a friend of mine asked me to help her to collect consumer insights at farmers market. And I was literally giving out samples, writing down people's feedback, and I thought, this whole industry is very antiquated. So with EduLife, I started working with RX Bar when they were really small, when it was just the two founders. And over 5 years, they sold it for $600 million to Kellogg. So any company can be acquired. It doesn't mean just be a tech company. So for me, given that my experience, acquisition and exit is non-negotiable. It's either exit or shut down, because I did raise money from venture capitalists. So the moment you raise money, you only have one option, either to get acquired. Actually, you have 3 options: get acquired, IPO, or you shut down. There's no opportunity or an avenue to say, hey, I'm going to build a business so that I can pass down to my kids. That's definitely not part of an option. So the point that I'm trying to make here is really think about, now that I'm savvier, think about, does the company really need venture capital money? Not everybody needs venture capital money, but the moment you take venture capital money, that they need their money back, and you need to work out a way for very rapid growth so that you can reach exit in less than 10 years.
I love it. So Ivy, you kind of knew the moment you took VC capital that the direction you were going to go in was an exit. But did you want to respond to that, Ivy?
Sorry, what's your question?
Sorry, I thought you were going to say something. I
said
that you took VC dollars. You knew that your option or your way out was an exit. That was kind of, like you said, non-negotiable. But for Ileana, you said that you were offended when that person came and knocked on your door and they wanted to basically buy your baby. So how long did it take for you to go from I'm offended and you should probably leave right now to, okay, this is the American dream? How long was that process? And then, what pros and cons did you weigh before reaching that decision that this actually could be really beneficial for me and my family?
Yeah, so it was about a 3 to 4 month process for me. And the way that it happened, it was pretty interesting because there was one offer that came, the person that knocked on the door. Then an email came in from someone else 2 weeks later. So I was kind of like, what is going on? And I felt almost like when you're pitching VCs, where you get when one venture capitalist bites, generally they all bite. You have to get one person to bite first, and it kind of becomes like this domino effect. But that's how it felt for me in that moment. But again, I didn't have to raise capital. This was fully bootstrapped. So I guess my pressures were a little bit different. Like, I thought I was building like a legacy business. We had like an 82% profit margin, which is like ridiculous and unheard of in business. And, the fact of the matter is, it was a very lean team. So a lot of the profits, came home. Obviously, they were divided in, taxes and employees and so on and so forth. But it was pretty profitable. But yeah, so I would say about 4 months was how long it took me to kind of get back to everyone. And I had quite a few meetings with everyone. And you want to feel like, yeah, this is my baby, but it's going into the right hands. There's a saying that not all money is green, is the same color green. And that is something that I think is very true when it comes to acquisition and also venture capital. Like, you know, some investors are not every single offer is an investor that you want in your corner. You know, so these are all things that I think should be weighed. But I was able to, because I had a few options, I kind of weighed the pros and cons from each person in terms of their experience, the likelihood of them sustaining the business and pushing it forward, what their plan was for the actual brick and mortar, you know, keeping the branding. All those things were important to me, that the business actually continued and it wasn't something that was like a passion project for them and they would just shut down a year later. So those are the things that I had to weigh.
So you considered several things beyond how much of a check they were going to give you. Ivy, what did you consider when determining selling the company and who you sold it to?
Yeah, so, you know, the acquirer, actually it was a surprise when it all happened, when I got a cold email from a competitor and saying, hey, do you want to chat? And I always like to keep things open mind, you know, like when people cold email me, I'm like, okay, I'm intrigued, let's chat, you know, let's see what happens. So the initial conversation was, why don't we just partner with one another and not kill one another? And jokingly, I said, you know what, you guys are way bigger than us, why don't you just buy us? And I was joking. And a month later, I got a letter of intent that we want to buy you. So that was how it happened. I wasn't actively going out to look for a buyer. So like selling the baby part, it was really painful. And my experience was, you know, first it was a joke and then I got a letter of intent, but I rejected the first offer because emotionally I wasn't ready, right?
Right.
And then 2 months later, they came back again with another offer, which I rejected again because I discussed this with my investors and my board. Because at this point, I have investors and I have a board. You know, everybody needs to be aligned. And I was still mentally shocked that, hey, is this the end of the line for me, for the company that I've put in blood, tears and sweat into it, right? So in the end, we all agreed that we can do better. We could get a better offer if we waited. So we decided to reject the second offer. And then 6 months later, they came back again with a third offer. So, you know, at that point, I was emotionally more prepared. And in my mind, that was when I knew what I wanted. So there were three things I wanted. I wanted an all cash offer. Second, I wanted to make sure that none of my employees are going to get laid off. I want to make sure that everybody kept their job. And third, I wanted to make sure that I only stayed with the company for 1 year. You know, there's always a golden handcuff period. So those were the three requirements that I had before I said yes to that acquisition.
I love that. And it really shows me the type of founder you are or were. The fact that you did not just think about yourself and you thought about your team, and making sure they still, you know, because sometimes in companies, when there's a shift in executive management, you also see a shift in the team, and the people that helped build the company are now unemployed. So I love that it reveals so much about your character. So you mentioned a couple of things that I wanted to go a little bit deeper on. And one of those things you mentioned was a cash offer. That was one of the things that you wanted. So can you cover some of the options that you typically see when it comes to an acquisition? Because it seems like there's multiple ways that you can exit.
Yeah. So depending on who you sell to, usually some offers can be at all stock offer, right? If it's a all stock offer from a public company, let's say Microsoft, you know, that would have been an easier conversation because it's publicly traded, right? But if it's an all stock offer from a private company, that is a high level of risk, because like what my investor said, you know, we invested in the company because of me. And now you want us to switch our stocks to another private company and we don't know anything about that CEO, that's a very high risk, right? Because if it's a public company, the risk is much lower. So sometimes you see part cash, also part stock, or 100% stock. So depending on whether the company is public or private, you want to weigh the risk. Because I sold my company to a private company, which is not listed, I wanted to make sure that my investors and board get a good return on their money without, any downside of the risk of, hoping that the CEO of the company will turn out okay. So it's also my way of protecting the future risk for my board and my investors, because they've been really good to me for the 7 years that I ran the business.
I love that. Ileana, let's take it back to last year. They knock on your door, you're like, okay, no, goodbye. And then they come back again and it's been a few months and you're like, okay, maybe this is a great idea. So in between you deciding, okay, I'm going to go ahead and entertain this, I'm willing to sell the company, and then the deal is done and there's a check in your hand or a deposit in your account. Can you kind of break down what are those steps? Because I think some people think when you decide to sell a company, it's just like that. And it can be a process that takes months. So can you break down the steps between committing to sell and then it's an actual close and you can announce it?
Yeah, so for me, that process took another like 3 months.
Yes.
And suddenly you have to get your finances in order. Suddenly you have to pay this massive tax on the sale, because people think, oh, you sold for X amount. You don't just put it in the bank. It's not just yours to keep and to hold and to, hug at night. It doesn't work like that. Uncle Sam wants their cut. Your blood, sweat, and tears in business is actually like a big percentage goes to the government. So that's something to allow for. For me, I actually, interestingly enough, I had a very kind of, it was a very sticky time for me because I had a copycat in a different state who essentially opened a store with the same name of my business. So I was actually in IP litigation with a copycat. And then the offer comes in and I'm just like, I'm in the middle of this like mishmash of things. But as a buyer, those are things that I think they were willing to really just continue or push through. Like they had to make that decision on their own in terms of pursuing the litigation or not. But they were kind enough to kind of take it off of my hands, but it was still something to consider. So to answer your question, taxes have to be paid. The IP, the legalities have to be very clear, because if there are any hiccups, it's going to cost you a lot of time. And for me, that was litigation. I had to sort through and figure that part out. And same thing that my colleague said here, it's understanding, what's next for the employees. How do you make this a seamless transition? Same thing with the kind of like the whole golden handcuffs. I had to stay on for a year to kind of massage the staff and the customers to staying on board. And the buyer actually, the way that she essentially kind of won here was because she was also in beauty. She had experience in the space. So by bringing in her services to an audience of, 6,000, 7,000 women, it's a sure start way to jumpstart and 10x the business. So she was very strategic in that manner. But yeah, it definitely took some time. And then once the sale was actually done and complete and everything was paid, which took quite some time, for me as an entrepreneur, the pressure now sinks in. Like, what's next?
Yeah.
So, what's next? I'm not sure if that's a question you want to ask me separately, but that was a big part of like the stress for me moving on from the sale.
Yeah, we're going to get to that. There was something else that you mentioned about staying on for a year, and Ivy, you mentioned the same thing. So is it possible for someone who's like, I want to sell the company, I like this person who's going to buy it, but I want to sell it and I want to dip out and I want to travel the world or live my best life? Is that an option, or does that depend on who they sell the company to?
For me personally, it was an option to kind of just wipe my hands and walk away. but it wasn't something that I wanted to do. And they were definitely encouraging me to not just walk away. Like, they needed me as much as I needed them. And because for me, my business was so kind of face to face, it was so client forward. We service clients like day in and day out. Like, that was what we did. So people buy into people before they buy into the actual thing. So the customers bought into me first. Like, the loyalty was to me. So for me to disappear and someone new to just step in, that would have been too big of a transition, and it would have been counterproductive in terms of essentially growing the business, because they could have just fallen off of clients and gone to someone else.
Right. Ivy, was there any mistakes when you look back that you feel like you made once you committed to selling the company? So in that process, was there anything that you did or didn't do that you feel like made the process more challenging for you?
I think it was good that I have the board to guide me along. A couple of my investors have also sold their company, so they guided me along. It was very stressful, very, very stressful, going back and forth. And, even the negotiating the letter of intent, not even doing the due diligence. You're not opening the hood yet, okay? It's just negotiating the letter of intent. That took about at least 6 weeks just to get the letter of intent right. And then after that, we open the hood, because my company is all about IP, right? Tech IPs. I'm giving you the source code, what assurance do I have that you're not going to just copy the source code and then go, set up a clone company. So I think what I was not prepared was the amount of stress that came along during the last 2 months right before I sold the company. Even though, the very first time they called me to the very day that I finally signed the paperwork was 18 months. But I would say the last 2 months was just very intense, and dealing with lawyers from both sides was just unpleasant. And at the same time, making sure that, I'm constantly updating the investors and the board, like here's where we are in the negotiation process, so that there's no surprises when the final agreement came. So it was and then managing the stress from your own employees, because they're worried they'll lose their job. They're worried that there's a new boss, they're worried that what if I don't stay, what's going to happen to them? So a part of me stay is because of my employees and my customers. That's the only reason why I stay. I want to make sure that the transition is smooth. So that was the unexpected stress. And that's why a lot of people ask me, what did you do the moment you sold your company? I said, I slept for 10 hours. That was what I did.
Was it the best sleep you've ever had?
Yes, in 8 years, yes.
That's the sleep that makes you drool.
Yes. I slept. The moment they transferred the money, I signed the paperwork, because they have a limit of time. You need to transfer the money within the 2 hours time frame, right? So the moment I checked the money was there, I was so relieved.
Oh, wow.
Yeah.
Okay, so talking about money, how do you determine when you mentioned negotiations and you declined their first offer, and I know Ileana, you said something similar, how do you actually negotiate what your company is worth? How does that feel? And if any of the ladies watching one day are in a position where they're considering selling, or they approach to sell their company and the number doesn't match what they think their company is worth, how do they handle that?
Generally, a rule of thumb for most industries is, I want to say, and I could be wrong. Maybe I sold myself too short. But it's between like 2 to 3 times the revenue amount, 2 to 4, kind of depending there. But for me, my specific industry being in permanent makeup, just kind of having a pulse on the market as well, and the growth potential. A lot had to be considered when figuring out what value I wanted to put on it. I felt that my company was worth X amount. It grew X percentage over the last 4 years, and I don't think that it'll plateau until X year. And just figuring out those numbers, that was something that was really important to me. But yeah, John, in terms of the number that we landed on, we were pretty spot on and close to what we both wanted, which was good. But a lot had to do with the growth and revenue from year to year, and how the market was.
Okay. Ivy, did you have anything to add to that as far as determining the worth of the company?
Yeah, so mine was a little bit more complicated because Love with Food was a subscription business, subscription commerce. So subscription commerce usually, you know, it can value between, let's say, 3 to 5 times revenue, right? Because it's a D2C brand, you have a lot of IP, you're collecting a lot of data. And then at the same time, I sold EduLife to the same buyer. And EduLife is a B2B platform that, you know, deals with a lot of consumer insights, machine learning, a lot of technology that was built. And with tech companies, is usually valued between 8 to 10 times. So when you blend the two together, it just makes the determination of the selling price a little bit more complicated. So we kind of took a blended kind of view and started from there.
Okay.
Yeah.
So determining the value of the company is really based on the industry that you're in, because it's going to vary, is what it sounds like.
Yeah, and it also depends on who's buying you, right? Some people are buying you because of the IP, right? I sold my company purely because of IP. But some people are buying might look at some business because it's, you know, it has a very healthy P&L, right? I mean, honestly, when I sold my company was profitable, but not fantastic in profit, because, you know, a lot of tech companies don't make money for the first 10 years. So it depends also on the reason why the buyer is buying.
Okay.
Yeah.
So we're going to go ahead and start into some Q&A questions. We already have some. Ladies, you can publicly submit your questions, or if you want to be anonymous, you're welcome to send your question to me directly. But one of the questions is, essentially, when you sell your company, you're selling your baby. How does that mentally and emotionally impact you? And how do you prepare? How would you advise other ladies to prepare to essentially sell their baby? You want to take a jab at that?
I think
it's also horrible, selling your baby.
Yeah, my child. It's definitely an emotional roller coaster, especially if it's, you know, your first time. It's a lot to kind of take in, but it's actually something to be really proud of. I think anyone that's in this situation where they're proposed with, you know, some kind of negotiation for a sale or acquisition or exit, it's actually a really, really big compliment to what you've built. Yeah, it's an emotional process, but the silver lining is, wow, I did it. Like that's fantastic. And now I can take this and do it again in another way, bigger and even better.
Okay. Ivy.
I don't think you can do anything to prepare for that. You just have to roll as it comes. Maybe because it's, you know, it's really, this is the first time, my first startup, and I sold it, and that it's selling the baby is as much as I want to say I'm very proud of what I've done, but it is also, I cannot deny that a part of me also died with it when I sold the company, because my identity is so tied to the brand, right? Like Ileana said, what's next, right? The question in all of our post-exit life is what's next. And, you know, if you Google my name is so tied to the brand, you know, and seeing that is very painful. And the worst is during your 1 year golden handcuff period, when you see other people making decisions on how to grow that your baby and how to you know, run that baby, and you don't agree with, is very challenging. So I feel like I've learned a lot. I've sold my company 2 years ago, and over even 2 years later, I am still trying to cope with the fact that, you know, I'm very proud of what I've done, but, you know, looking back, I'm also sad I'm no longer part of the journey.
Yeah.
Yeah.
Thank you for your honesty in that, especially when you kind of touch on feeling like you had an identity crisis to a certain extent. Another question is for the women who are watching, how would you advise them if they're trying to figure out if they're actually ready to sell their company? Like, how do they know they're ready for exit?
I think, go ahead, Yelena.
I was gonna say that's actually it's a very kind of case by case basis sort of a question, but I'm just thinking, and there's clearly different levels. You know, if you have a small business like me where you're doing $1 million a year, but of course, you know, you don't have investors and there's no one kind of that you have to report to. It's just you. Yeah, you take a lot more home, but there's no one to consult, right? It's kind of like just you. So it's like, well, I hope this is the right thing to do because I don't have shareholders, I don't have investors to kind of speak with. But yeah, I don't know that there's like a specific, oh, this is the time to strike. Some people say strike when the iron is hot, when you're the hottest, when you're like at your peak. It's like NBA players, like maybe consider retiring then, because after that, there's going to be a downturn to that wave. So I've heard that a lot, and I guess for me, I did sell at my peak, but I guess, you know, is that relative considering that we don't know what the next couple of years could have been like as well had we stayed on? What do you think?
Ivy, what are your thoughts on this?
I think it's, sorry, go ahead. When it's time?
Yeah.
Yeah. So for example, like when the buyer made the first offer, I'm like, emotionally, I'm just like, no way, you know. Second time was when the second offer came, we just thought that they weren't paying enough. As in me and my board, right? And then during that 6 months while I continued to run the business before I saw the third offer, I had a very honest conversation with myself if I want to continue to do this. I was also very burnt out, you know, given I'm a solo founder, you know, I have raised millions in venture capital and I have this hockey stick growth that I have to show, right? It's been 7-8 years into the journey. And I had a very honest conversation with my board, asking them if they still thought that I was the right CEO to run the business. Because, you know, at some point, you might be the right person to create, you know, but having that self-awareness that are you the right person to continue?
Yeah.
So I had that conversation with my board and they all thought that, you know, they want me to continue as long as they feel like I still have the energy to continue because, you know, as a solo founder, I do everything, right? So when the third offer came, I thought it was time because I was burnt out. If I had the question where I even questioned myself if I'm the right person to continue the journey, that was when it was like a light bulb moment for me that it's time.
Yeah. That sounds like you were at your peak of being burnt out.
Was burnt out and I felt like I have done my best to get to the company the way it is and it's a good offer. I don't know if there will ever be another offer. Maybe there is, but we all agreed that it was time to cash out.
Okay.
Yeah.
I want to just quickly add that I wasn't ready for a sale or an exit or anything like that. But when it happened, it's just interesting how the world kind of works. I do think the universe kind of brings you what you want in a way, in a really kind of weird and sneaky way. Because while like right before I was even approached, I was already thinking of like pivoting the business model a bit to reach more women. I wanted to go from one-to-one to one-to-many. And when you're in a brick and mortar, you're contained. Like you can't serve just thousands of people because you can only serve X amount. You only have X number of days, X number of hours in the day to serve. So when I got the offer, that was another reason why I kind of had to really consider it because I said, wow, maybe this could allow me to take that step to serving the thousands that I really want to serve and, you know, walk away peacefully from this business.
Thank you for clarifying. We have a question coming in from Tanya, and it says, in addition to having strong revenue and cash flow, are there any specific things you recommend non-tech entrepreneurs do strategically to make their businesses more appealing to buyers? Ileana, I think you're a great person to start with that one.
Yeah, I would say branding, positioning, and know your numbers. You'd be surprised how many small business owners don't know their numbers, or don't have an accountant, or don't have an attorney, or don't even own a trademark. These are essential, like basic things that everyone that's a small business owner that's, I guess, non-tech, because once you're in tech, there's no way you're going to graduate to the big leagues without even being like a, proper corporation. It's just not going to happen. You're not even going to be really considered that serious. But on a smaller scale, if you have your LLC, are you paying your taxes? How is your engagement on social media? It's about almost building the community, because people are going to buy into your people more so than just like your thing, if that makes any sense. They're going to base that offer off of the consumer base. And that's what they want to 10X, is your base. So focus on, like I said, your social media, the engagement, getting those numbers up. The positioning of your brand, how you're showcasing yourself, how are you showing up? Are you trusted? Do you come off as loyal? Are you committed? Are you doing business with integrity? Is your IP, like, is all your legal things in order? Do you own your trademark? Because you don't want to have that headache when someone comes to you with an offer like, well, I actually don't even own the name. It's like, really? You don't want that. And yeah, just have all of your finances in order, which I think a lot of business owners do not do. It's like, oh, well, I made 1.5 million, and it's like, oh, but I owe 75,000 in back taxes, or I'm in this jam or the other. It's actually very, very common for small business owners. When I say small, I consider small to be like under like the 5 million range, kind of like where I was. And it's really easy to get lost in the sauce when you don't come from tech, when you don't come from millions and millions and millions. It's easy to transition from 9 to 5 to now you're making 7 figures, and you're just like, whoa, I'm just excited. I'm just going to spend this. You have to be very focused and very disciplined.
I like that. And it kind of reminds me of something that Beatrice Dixon said. She is the founder of the Honey Pot. And for those of you who missed it, she spoke on Monday about the blueprint to creating $1 million product. And one of the questions was, what separates $1 million product from just any old regular product that's out there? And she said, any product can be $1 million product if it's branded correctly. So it will never just be about the product or the service you offer. It's everything else around it that will attract customers, clients, users, revenue, investors, and eventually a buyer.
Yeah. So to add on that, I'm also an investor with X Factor Ventures. We are a group of female entrepreneurs who came together to raise a fund to invest in other female entrepreneurs. I see a lot of deal flow. I mean, I see a lot of non-tech companies, and whether it's tech or non-tech, the two things that I always ask is, how are you different from your competitors, right? And honestly, all of us are biased. We always think that our baby is the best, our baby is the most different. But if you ask an external person, when I do research, I feel like, hey, you're really not that different from your competitor. Okay, so that's one. And two, really know your numbers. I've vetted and gone through a lot of CPG companies, like, here's the next baby food, or here's the next great sauce. And I'm very data driven. So if you're CPG, then I'll ask you CPG metrics, like, hey, what's your sales velocity? If you're going to retail, right? What's your, when does the retail store do reset? I'm very surprised. A lot of people don't know their numbers. So that doesn't create a lot of confidence in me that, I should write you a check, because, if you don't know your numbers, how do you know what's your North Star?
Right. Yeah. 2 more questions. One is, I would love to ask Ivy if she sits on advisory boards. I'm a founder of a company similar to Love with Food. So do you do any advisories or
yeah, I do. I haven't, it all depends on the time commitment. Karen, I would love to speak more to you offline about your business, and then we can take it from there.
Perfect. Last question. We touched on this very briefly. Corinne, go ahead and if you feel comfortable, put your email in the chat. If not, you can send it to me privately and I can connect you to Ivy. So last question, we briefly touched on this. Ileana, you kept saying you wanted to know, you kept thinking, what's next? You know, after I sell this brand that I've been working on for 4 years, what's next? Ivy, you mentioned the concern of basically an identity crisis because your personal identity was so tied to the brands. So now that you guys have had, you know, a few months or a couple years now to create the new version of life that you want, what is post-life exit like? Ivy, is it better? Is it worse? Are you like, I miss this and I take me back? What do you think?
Yeah. So if you see my background, that's base camp of Mount Kilimanjaro. That was what I did. And that's my tent.
Oh my goodness.
Yeah, and that is almost at, the peak is almost 20,000 feet. This is about, I think we're at about 18,000 feet. And I took time to decompress because after 8 years of nonstop, I needed to step back and rejuvenate, and also figure out what I want to do next. Like I tell everybody, I feel like I'm not employable anymore. That's how I feel, because being a CEO for so long, I like to be in charge of different things, right? And I've noticed that I cannot be just the VP of product or just the VP of technology, because I can no longer know how to run in one lane. I like to run in multiple lanes. So that's what I found out about myself, because if I cannot find a place where I can run in multiple lanes, I can be very disruptive to the organization in a very bad way. Two, I tried investing, you know, dabbling in the VC world. I like it because, you know, I get to help the next generation of entrepreneurs, because a lot of people have come forward to help me in my beginning. But I miss the action of building a brand, building a team. So at the end of the day, I realized that I'm still an operator. So after my travels, I came back to US. I decided that I want to maintain my interest in the operating role. That's why I actually, right now, I'm the CEO, general manager of Whistle.com. That is after much, you know, soul searching. That is how I came to that conclusion that I want to go back to being an operator.
And do you love it?
Oh, yes.
That was a big smile, so I believe you.
Yeah.
Ileana, post-exit life, what is that like? And how long did it take you to settle into, you know, not being with that company anymore once your, what do you say, your golden handcuffs were expired?
I mean, for someone that was used to working 6 days a week, when you have stores, you have to open and close, you have to oversee staff, you have to actually serve clients every single day, like physically put your hands on them and do the work. It was a massive change. I would wake up and be like anxious. I developed anxiety post-sale because what do I do with my time? I can only take my daughter to the park so many times in a day where I'm like, I need to work. But I took like 6 months off, which was fantastic. I moved. So I did quite a few things in my personal life to kind of shift things around and kind of just, you know, just level up slightly. And yeah, it was an emotional journey, but it prepared me for, you know, the what's next. That time from those 6 months were fantastic. My commitment to the prior business is only 1 day a month in terms of going into the studios, meeting with the new owner, and having kind of like a, where are we today? How are we performing? What can we do better? So it was a 1 day a month commitment for a year. So it wasn't anything that was too time consuming anyway. But yeah, but now, well, I guess late last year, the pivotal moment for me was the pressure of, yeah, the what's next, you know. Once you're lucky, but twice you're good. I just felt like if I can't replicate my results, if I can at least 5x. If I can't go from 2 million in sales to 10 million, then I'm just like, oh, I'm nothing, you know. And that was something I had to remove from my mindset. But there is a bit of pressure, like to be able to say that you sold a company, even on a small scale like me, it's a huge accomplishment for someone that doesn't come from anything like that. It's not a commonality where I come from, my family, my friends, my community. But yeah, now the pressure is, can I do this again, bigger, and reach more people? Now we want to reach thousands, and now we want to, if we do sell one day, it should be over 10 million, right? That's the goal. So that's where we are today.
Wow. Did you ladies enjoy this conversation? Give a smiley face, an exclamation point, send some love to them, because I thought this conversation was amazing. It was informative. It was honest. I like that there's no filter. Thank you, ladies, so much for your time, for being transparent and showing and sharing parts of your journey. This was amazing. For the ladies who said they wanted to be connected to them, I will personally email them and CC you on that so they can take the conversation in whatever direction they'd like to. Ileana, Ivy, thank you so much for your time. I hope you have an amazing holiday weekend and just much success with your current ventures and whatever else comes up for your companies.
Well, thank you so much for inviting me.
No
Have
problem.
a good weekend.